Before you buy another meme coin, watch this. I study charts 8 hours a day for over a year, and this is exactly how you can turn $100 into thousands trading meme coins or even altcoins. Okay guys, a lot of you asked for some more technical analysis-based videos, so just wanted to cover basically the first section of that. There's a lot to kind of go over. But in trading, and this applies to pretty much any market, I would say, I mainly trade altcoins and then meme coins as well. And then long-term hold, more stable coins like Bitcoin and ETH and Sol and things like that. But you're going to want to have a bunch of confluences. And confluences in trading, it means a bunch of things line up together. So if you're looking for a perfect entry instead of just aping in and possibly top blasting a lot of your trades because you see it moving up and up and up and you're on the 5-second time frame, it seems like it's moving really fast. You can use some of these confluences to get better entry points and maximize your profits, basically. So I have the sheet pulled up here. I kind of made it pretty quickly, but these are pretty much all the basics I'm kind of looking at. And some of these I only look at 3 at the time because we're trading meme coins here and it moves a lot faster. But a lot of these, as you start practicing and you start learning more about these basic things in trading, you're going to start to see them as well. And this took me, I want to say when I first started trading, probably a year to get used to. And I was practicing every day, probably 5 to 8 hours a day. So, I mean, it's no joke trading, but I think it's fun and it's worthwhile. It's something I enjoy doing and learning. So that's why I do it. But the first major thing you always want to start out doing is trend lines. And this is the basic in trading. And I'm also going to put support and resistance lines as well. Forgot that one. But these are going to be your go-to guide. If you see any of these break or things like that, or if it's a strong breakout, maybe it's moving to the bullish upside, or it could be the other way. Maybe it broke a trend line to the downside. You'll be able to see that and get out. Fibonacci is huge. You're going to have that golden area in between like 0.618 and 0.5 usually. However, with meme coins, I found it to be actually because they pump up so fast and down so fast. It's usually around like, depending on how you're using the Fibonacci, 0.786 or 0.17 or 0.236. I prefer to use it kind of a backwards way. That's just me, and it comes from an older strategy I used to do when I was trading altcoins. You can easily see double tops, triple tops, which signals it's probably turning bearish. Divergence as well. This is key on the MACD or RSI and with the chart. So here on the MACD, you can actually see I'm on 30 seconds. As you move down in time frames, a lot of these rules are going to get broken, okay? Because you're on shorter time frames. As you move up in time frames, a lot of these rules will be more consistent because you're on a higher time frame. So like if you're on a daily chart or something, maybe it's like Bitcoin or a weekly chart, a lot of that will make more sense. So if we look at even Sol right now on the weekly, I could probably tell you where it's kind of hidden. I think we're having a big old fake out here, but what do I know? But you're going to see like these fair value gaps. So this is a fair value gap. This is a fair value gap right here, this green. Change that to green. And that's where, I mean, I'm on the weekly time frame. Meme coins were trading 5 seconds, minutes. But I do think it hasn't, it came down, hit this fair value gap. So it has already come down. So, but we are in an overall uptrend. So it already came down, hit this fair value gap. And then now it's probably, hopefully pushing back up here, but I think we're in kind of a little fake out territory. I mean, it looks like it's already pushing out. So you always want to kind of follow the trend. Big thing in trading is the trend is your friend. So the more points the candles hit on this trend line, the better. So like right here, this candle could come down and hit this trend line again. We do have this fair value gap here. And there's channel trading as well, which I'm not going to really get into today. But these points connect here. You'll notice a lot of these candles will bounce back and forth between these areas, wherever your trend line's drawn from. So they should bounce back and forth depending on how you draw it. And this just takes practice to draw, really. So you could line these 3 points up here. I like to have at least like 3 points touching it. This was kind of a breakout, then it dropped back down to this channel here. Went all the way back up. So you have a big old red candle here. Could drop down and then go back up, down, up, so on and so forth. But Memecoins basically have the same thing, right? So I drew, this is sand, I believe, from yesterday. I think I was in bed or something, but this one kind of blew up. So we had 2 fair value gaps right here, and you're like, what is a fair value gap? Let me actually pull that up here. So here's how to identify fair value gaps. You're going to have bullish fair value gaps, and you're going to have bearish fair value gaps. So it's just the space in between these wicks here. So here's this wick, and here's usually a bigger candle signals like a bigger possible entry point. But we are on lower time frames on meme coins, so it could hit those just lower fair value gaps really quickly and bounce back up. Something to keep in mind. So same with the bearish fair value gaps here. You'll see this is a gap between this wick and this wick. So we don't have a giant wick right here blocking this area. So that's basically what a fair value gap is. So if we go back here, we'll just pull up sand here, but you can see it came down and hit this little fair value gap. You'd think it'd come down and hit this one. Usually I'll hit like the halfway mark on these, at least in altcoin trading, but once again, meme coins are a little different. And you're on a much lower time frame, which can be hard to find these confluences as accurate. So like I said, these confluences will become less accurate on lower time frames. But if we did see this dip here, we can easily, and I do use the fib backwards. You can do it however you want. But this is probably, if you see these large pumps coming in, these are some big green candles here, which signals that change in direction. And a lot of times this is called a ChoCH. So they don't really have these indicators on meme coins. They have like an automatic indicator on TradingView. They don't obviously on Bolex, at least that I found, or anything like that. But they also have like smart money concepts and something, which I'll go over more. But you'll see here it shows kind of like a break of structure. And then it also shows, this is a big break of structure where you had a giant push up. It also shows ChoCHs here, or changes of character. So these aren't great changes of character. Oh, I guess we are on the week, but if we drop down to the minute, let's see. So these changes of character here, you'll see a good big candle, right? This big white candle here, and then we'll have a change of character once it passes that other top. Something like this would be a change in the stated direction. So I'll just draw a line. But this would be a general change in stated direction after this candle hit. I mean, even after these bottom candles. And that's not as effective as a ChoCH or a change of character. But once you get that change of character in, you'll notice a dip down. And it hit right on that, fair value gap here. And then if we have another confluence, right, we can draw our Fibonacci. So let's say we draw this top to bottom. You'll see it lines up perfectly with that 0.618 and the halfway mark in the fair value gap. We'll see, because we had a really good change of character here. And by good, I mean we had a big candle and a change in stated direction after it moved up past this candle. And this is only on the 1 minute time frame. But you had all these big candles, and you don't want to enter on these, right? There should be a pullback. But it just missed it by a hair. But you can see there's a fair value gap here as well. So we can draw that. There's no wick, but we can draw that right here to that wick. And it cut right through that halfway point on the fair value gap. And it lined up with our 0.618. That's just altcoin trading. But you can see the same thing here. Like if we put our fib, right, I put it from this top to this bottom. I mean, I would have thought it would have hit this 0.5 because it's a bigger fair value gap. But it did come down and hit our 0.168 area, right? That line, along with that fair value gap. So instead of just jumping in on a trade, you can wait for that pullback, get some more profit in, because if you just jumped in and you're paying for slippage, a lot on meme coins and the gas fee. Let's say you just jumped in, maybe you got in like here at the top, and we'll just write it to the top here, 40% compared to if you get in towards a pullback. Now you doubled your profit, right? We have almost an 80% now. So that's why you always want to get on those pullbacks. There's plenty of meme coins. If you feel like you're missing out on trades, don't. I probably find 10 trades a day, which I think is kind of over trading, which is another thing I'll get into. But you can see here, it came down, hit that. I mean, we can even see it on this one, on this first little wave up here. And if we draw our fib, just even from this first point down to the bottom here, once again, the backwards way of drawing it, it's a retracement. It's a Fibonacci retracement. So you can draw it this way too if you want. That's how a lot of people draw it. So it hits that 0.618. So that's why I was talking about the 0.786 in the beginning. Sometimes usually it'll come down there, which matches up with the 0.17, 0.236, the way I draw it. And you're probably like, why do you draw it backwards? Comes from an old trading strategy I used to do a lot when trading altcoins here. But you'll see it does line up with this fib here and this fair value gap. So however you guys kind of want to do it is up to you. Let me pull up a rectangle here, but you'll see here's another fair value gap. Here's between this candle and that wick down there, right? Came right in between that fair value gap, and there'll be a halfway point, usually like right there. But you could have set your entry up, set in a limit order on NovaBot or something, right at the 0.382, because that's a good lineup with the fair value gap for an entry. Hits that perfect. And if we actually go the right way of the Fibonacci, and 0.618 is a great spot to hit. 0.618 and 0.5 are the best. So if it hits that 0.618 and you got that push upward, you're pretty, golden there. So we also had Bollinger Band squeeze right here, which is nice. And this is going to be hard to see on live trading because it'll be moving, right? And I'm on the 30-second time frame, by the way. You might even be on the 5-second here. I really don't like going down to the 1 second. I just think it's too fast. It's not my jam. Other people like doing that, I've seen, but kind of up to you. But you'll see you can hit that perfectly. And then we can also take a look at our MACD. So our MACD, you're like, oh no, it's crossing over. Is it going to go bearish? But then it crosses over right here. So that's why it's hard to tell some of these things, and you just kind of take a risk on some of them. But you can see RSI even. It dipped a little bit below that 50, but then popped right back up. So those are the things you got to kind of be aware of. Like I said, sometimes an exit point on this MACD is that crossover. But I honestly don't like looking at exit points on the lower time frames. I'll go up to like a 1 minute on meme coins here. You can see here on this MACD, let's go back to this area. So that was our 0.382 here, but our exit points, we can go move to like a higher time frame and see how it didn't, it just kind of bounced on that MACD. It didn't really cross over. It crossed over a little bit here, but you already had some pretty big candles. And you can consider this a change in the state of direction here because of these big candles, especially this one. I'd also say this is kind of a beginning of a wave, like this was ticking up, right? So if we drew our trend line, you can see we're not coming anywhere below that. We could draw even another trend line here, right? Connecting with these points. So just draw those out. But yeah, you'll see on the 1 minute, this MACD is pretty bullish still. It's not dipping bearish. And when it does dip bearish, it bounces on the 50. So it consolidates here, which is fine. You could have got out here and been safe. You don't know if this is going to tank. It's a meme coin. Especially you're at the 25 million mark. So the key levels in meme coins are those big levels. You're going to have 500K. You're going to have 1 million. You're going to have 5 million, 10 million, 15 million, 20 million, 25 million. so on. Okay. And you got to think a lot of people are going to be trying to get out of those areas as well. So that's why there's usually kind of a sell off at those points. But these line up great. And this is why I draw the Fibonacci backwards, just so I can see the take profit levels pretty quickly. And usually they're around like 1.618, 1.272. You could put in separate take profits here, right? You could take 25, 50, 75, 100, and then take off all the table. If you saw this heading downward, you know, this giant red candle here didn't come past here, so it's not a full change of character. Okay. So this is a change in the state of direction, but it didn't come past this wick here. It consolidated, and our general trend was still moving up. So this is kind of more of a bullish sign here with this trend. Just change this color. And this one. Now, what would make me nervous here is it broke this general overall trend line. I probably would have got out there, and it was at the 25 million mark, and it hit 2.272. That's usually pretty solid, especially if you got in, you know, down here for that run up. Say you got in like on the first wave, you know, that's a 2x. That's fine. Don't get greedy. You know, you can always re-enter. But you see it only had like one more general push up there. So it pushed up to 30 million. And also with these, for exit points, if you get a big wick like this, it's probably, this is mean the sellers are coming in. So bullish and bearish candles, if you see a big wick like this, a lot of sellers are coming in and fighting that bull move down. So that's why it's just not a big green candle, you know, like this one, or like what we first saw. This is a very bullish candle. It's a lot less sellers on that one. It just has that little wick at the top signaling that bullish move. This is kind of a bigger wick. I'm surprised that didn't come down more, but you can see here it's starting to sell off, and it consolidates, and then it pushes back up. Okay. So, but this trend line, I mean, if I drew it more perfect, probably hit that wick too. So it's going to stay usually within this channel. However, it broke this trend line, signaling probably get out, right? I mean, you would, if you entered here, you would have lost all your profit. You're just at break even now. So you could set like your stop loss with this area, because you know, if it bypasses this area here, it's like a support resistance area, it's probably going downhill. And right when I saw like, you know, this general change in direction here, and you can see it's moving down. This isn't even a ChoCH. It moves a little back up, and then you get these big bearish candles just signaling a downtrend. So those are some of the key areas I look at. And then if we look at the MACD signaling that bearish trend as well, you'll notice this whole time it was bullish during this part here. This whole time it was bullish on this wave, right? Moving up, then it consolidates, and then it bounces on this MACD, had another little push up, but you can tell right here, right when it crosses and it's in this bearish zone and it's past that 50, it's time to get out. And you can tell with these big candles here, you could have told, you know, with this big wick at the top here, just a lot of, once again, different confluences signaling it's time to get out and not hold that coin any longer. Hitting the 25 million mark, you have a big wick at the top, you have your MACD turning bearish, it's below that 50 line. It's no longer bullish like it was up here. And, you know, just kind of went downward from there. But those are kind of, I did want to cover, I guess, I'm going to go into more in changes of characters and things like that, but I did want to show you a divergence. So here's a divergence right on the MACD here. So this line here is moving downwards, while this, another confluence, another signal to get out, okay? While this line is up, okay? This is a divergence. When you see this on the MACD, and I'm on a higher time frame, like I said, for exit points, I would move to like a higher time frame, go to like 1 minute, 3 minute for meme coins, just so you can see, and honestly, probably only in the 1 minute, just so you can see these better. When you're trying to get in, I'd probably move to like 5, 15, 30 seconds, depending on your preference. I don't, like I said, don't like the 1 second. But this divergence here, this is moving down on the MACD, and this is moving up. So that's another point when you see a flip like this, once again called a divergence, it's probably going to reverse on you. So like, here's another bearish divergence. This is a double top. It's a little bit lower, but kind of a double top, and this is going up. So that's going to go bearish on you on the 1 minute, or we're on 30 seconds. Just trying to find a bullish divergence. Here's a little one, I guess. So like this kind of did a double bottom almost. But here's a general push upward. So I'll grab this trend line. This would be a bullish divergence. This is on FAFO, but you'll see here on the MACD, it's upward, while we actually have a downward movement. So this could have been a signal to get in too, and you could have caught this little wave here. So whatever that is, 55%. So this must have been older, but I mean, some older coins you can still catch some profit on, but you'll see that divergence there signaling a bullish move up. So those are some of the things I pay attention to. I want to get, because this video is already so long, I do want to get more into double or triple tops, changes of character, Elliott wave. I've noticed on the first wave up, on like the 1 minute time frame, and then I move to the 5 minute, there is a huge Elliott wave. So it's usually like that first initial pump up, you'll see, right? Here's one. What, Anna was pretty big yesterday, I guess. And Anna's still kind of moving, so I'm kind of surprised. There's some little good pumps up here and there. If you have a good enough coin, you can kind of tell the sentiment on it, and maybe you're in certain groups or whatever, but you can see. So you'll have like a general push up and an Elliott wave, which is, and I'm going to have to get in to another video on this, but it'd just be like a 1, 2, maybe like a 3, 4, 5. So that'd be your Elliott wave. And when it hits the 5th wave here, usually it's either going to consolidate, which I saw on Sand last night. You'll see we kind of had a Elliott wave for this initial pump up. We had a 1, 2, 3. I think this was the 4. 4 usually lines up with 1. Maybe it's a little off, but 5. It consolidated, which sometimes happens on the 5th wave, especially on a good coin. And we have this general uptrend, so it's kind of bouncing around, trying to think which way it's going to go. Am I going to, go bearish or bullish? This is kind of like a breakout triangle too. And I thought it was going to go up to like 50 million, because that's where they're usually headed next. But it just hit that 30. So broke out of that triangle, and you can see once you saw that little breakout, we're on the 1 minute. You saw this green candle, you could have put your entry right with that trend line there. I missed it a little bit, but you could have done that. Triangles I'm going to have to get more into, but there's a bunch of different chart patterns like this one. Here's the Elliott wave theory, or you're usually going to have 1, 2, 3, 4, 5. And it's either going to reverse and go A, B, C, which we see a lot on meme coins, or it's going to consolidate back and forth and go for another push up. And usually that kind of, I want to say, depends more on the sentiment of the coin with meme coins. What are you seeing on X? What are you seeing in groups? Things like that. Is it a good coin, or is it just another crappy coin? Like most, like 90% of them. So I'm always with the sentiment that it's bearish with this ABC move, but sometimes you'll see it consolidate and it'll do another push up. But that Sand one only had that little push up. I was surprised. But then you could have tell with that big wick to just probably get out. Anyways, I want to get more into these chart patterns with you. I have a lot to go over on technical analysis, but this is big. This is kind of the cheat sheet. I love this cheat sheet here. Goes over like wedges, head and shoulders, kind of everything. And I also want to go over, I showed you a little bit of the Elliott wave, but I do want to go over more of that because I'm seeing that a lot, as well as change of characters and double or triple bottoms. But these things are kind of the basics I look at when finding entry and exit points for meme coins. I do hope this helped out a little bit. Like I said, probably focus on some of these first 6 things. I'll go over these more. I got to go over support and resistant lines more too. It's just a lot to cover in one video because there is a lot of different trading strategies you can use, but I wanted to show you the basics of what I'm using to find good entry points and good exit points. So you're not just aping in like a lot of people are top blasting and then just, flips downward. You can always put like your stop losses. Like I said, follow those trend lines. And it takes some practice to get used to drawing trend lines. I mean, it took me a good year. I'm not gonna lie. I had no idea what I was doing. It took me a good year to figure out trend lines, but like once you get used to it and you start practicing, just like anything with like a sport or music or, whatever kind of hobby. But you can see here, it flipped. I probably would have honestly gotten out here. I don't know. But yeah, this general trend upward. And then it hit this. I mean, right when you saw it break this upward trend though, it probably did. Yeah. So it retested that trend line. Get out there. And you'll see that a lot in trading. It will retest that line. Meme coins you're probably going to have to be more careful on because they can dump in like a second. But yeah, definitely if you see a trend line break, get the hell out of there. So especially if this is bearish. But make sure just follow, practice. I am putting together a playbook over in TradeZilla to kind of go over all the confluences I'm seeing that I want to share with you guys. It's just kind of in the works while I'm trading, stuff like that. But I will share this with you guys once it gets put together and what I'm noticing the most of. Anyways, if you guys do have questions, please let me know in the comments. Don't forget to subscribe and let me know what you want to see next. Thanks.